So am I looking forward to Christmas? Yes, I always look forward to Christmas, but probably particularly so this year because it's been not the easiest of years. There's been a lot of things to cope with. You know, we've had to be very, very sharp with our thinking, with our analysis, because there's been lots of problems out there. And that's made 2018 really quite different from any year we've had since 2011, since when markets have had generally a good run with rising share prices and a rising dollar. And our clients have benefited a lot from that. This year, it's been much more difficult to find anywhere to get a decent return. Yes, you're right. It's been extremely difficult for equities this year. If you look at the FTSE 100 up to last night, the 18th December, it's off around 12.8%. Now, at the December seminar, I said that being an equity investor, you get the benefit of a long-term return that will not only keep pace with inflation, but generally increase your purchasing power, which you don't always get with bonds. But what you have to put up with as an equity investor is markets go up and down in the short term. And as I said then, on average, the US market loses money once in every 4 years, and so does the UK market. And on average, when that happens, the US market loses 11.6% and the UK market 9.6%. And for the US market, we're going back to 1825 when we're looking at history, UK market 1900. And as the FTSE closed last night, 18th December, was off 12.8% so far for 2018. It looks like it's going to be one of those negative years, barring a Christmas miracle and a recovery like we haven't seen for a long time. And it looks like it's going to be around, if you allow for the dividends, average with regard to losses sustained. Well, as we explained at the seminar, we've used a lot of protective option positions this year, and that has been hugely beneficial in defending the value of our clients' capital. So although we've lost a bit of ground in 2018, we've lost nothing like as much as some of the markets. And whilst I mentioned that the FTSE is off 12.8% up to close last night, China's off nearly 20%. You know, there are losses across the board in equity markets. And we have been much more defensive than average equities, and we've had a lot less volatility. So I'm very pleased with the work that the team did this year, because I think they've done a good job. I think we've had to be very mindful of the risks, and on the whole, we've done that. Yeah, of course, there's lots of risks going into 2019, but before I talk about those, let me also say that some of the fundamentals in equity markets are now looking quite attractive. You know, you've not seen a huge decline in earnings. There are problems out there, but on the whole, equity markets are now looking a lot more attractive fundamentally than they did at the end of 2017. But there are still things that could spook them. Brexit, the US deficit, and trade wars being the main three. So the main problem we have with Brexit is uncertainty. Markets hate uncertainty. You know, the CBI, Institute of Directors, Federation of Small Business UK, are now all saying to the government, come on guys, you've got to get this sorted out. We don't want to fall off a precipice at the end of March. Businesses need certainty, otherwise they don't invest. The main problem you have with Brexit is there is no clear majority for what we want. 48% of the population voted to stay in, and they're probably the biggest group, because of the other 52% that voted to come out. That 52% had different visions of what Brexit looked like. And what you're seeing in play now is the differences that exist, not so much in the Remainer group, but in the Brexit group. This is going to go to the wire, but the clear majority in the country want some type of deal with our EU partners, and let's face it, they're our closest trading partners. And if we can get that and get to April, I think we'll all breathe a sigh of relief, and I still suspect that a deal will be done, and if it is done, sterling is going to rally massively. I think one of the major issues that we've got to watch for next year, and people mustn't lose sight of while they're worried about trade wars, geopolitical risks, tensions between US, China, US, Russia, Brexit, is that the US is running a big deficit, a budget deficit. You know, that's around $1 trillion a year. It's a big chunk of GDP. And if that goes on, interest rates are likely to rise further, and that will be very bad for the bond market. So whilst we're all worried about equities, they always seem to get the main flat. I'm going to say, as I said last year, watch out for bonds, because they can be hit equally as hard. Yeah, my final message would be to all our clients, thank you very much for entrusting us with the management of your capital. Believe me, we never lose sight of the fact that money is there to enable a lot of people and institutions to achieve goals that are very important to them. And then, of course, hope that 2019 is going to be prosperous for everybody, that people will be in good health, and that it will be peaceful. And it would be really nice if we get to this time next December and we can talk about something other than Brexit and trade wars and that. But in the meantime, I hope everybody has a very, very happy and an enjoyable Christmas.